Understanding stock market indicators is essential for making informed investment decisions. These indicators help investors analyze market trends, assess stock performance, and determine optimal entry and exit points. Whether you are a beginner or an experienced investor, knowing these indicators can significantly improve your trading strategies and investment success. Below are the top 10 stock market indicators that every investor should be familiar with. 1. Moving averages, MA. Moving averages help smooth out price fluctuations by calculating the average price over a set period, e.g., 50-day or 200-day MA. A rising moving average signals an uptrend, while a declining one suggests a downtrend. Investors use moving averages to identify potential buy and sell opportunities and confirm market trends. 2. Relative Strength Index, RSI. The RSI measures a stock's momentum on a scale from 0 to 100. If RSI is above 70, the stock is considered overbought, meaning it might be due for a pullback. If RSI falls below 30, the stock is considered oversold, suggesting it may be undervalued and ready to rise. This indicator helps investors avoid buying at peaks and selling at bottoms. 3. Moving Average Convergence Divergence, MACD. MACD is a trend-following momentum indicator that shows the relationship between two moving averages, usually 12-day and 26-day EMAs. When the MACD line crosses above the signal line, it is a bullish signal. When it crosses below, it is a bearish signal. Investors use MACD to confirm trend strength and potential reversals. 4. Bollinger Bands. Bollinger Bands consist of 3 lines, a middle moving average and 2 outer bands that expand and contract based on volatility. When prices touch the upper band, the stock may be overbought. When prices approach the lower band, the stock may be oversold. Traders use this indicator to identify potential price breakouts. 5. Price-to-earnings ratio, P/E ratio. The P/E ratio compares a company's stock price to its earnings per share, EPS. A high P/E ratio may indicate an overvalued stock, while a low P/E ratio might suggest an undervalued stock. Investors use the P/E ratio to compare stocks within the same industry and assess growth potential. 6. Volume and on-balance volume, OBV. Trading volume reflects the number of shares traded within a specific period. High volume often indicates strong investor interest. The on-balance volume, OBV, indicator combines volume and price movement to measure buying and selling pressure. A rising OBV suggests accumulation, while a falling OBV indicates distribution. 7. Fibonacci retracement. Fibonacci retracement levels help identify potential support and resistance levels based on historical price movements. The most common retracement levels are 38.2%, 50%, and 61.8%. Traders use these levels to determine price pullbacks and continuation points in an existing trend. 8. Earnings per share, EPS. EPS represents a company's profitability by measuring net earnings per outstanding share. A rising EPS indicates strong financial health, while a declining EPS may signal weak performance. Investors use EPS to compare companies and assess their ability to generate consistent profits. 9. Dividend yield. The dividend yield measures a company's annual dividend payout as a percentage of its stock price. A high yield may indicate a stable income-generating stock, but it could also suggest potential risks. Investors looking for long-term passive income pay close attention to this metric when selecting dividend stocks. 10. Fear and Greed Index. The Fear and Greed Index gauges investor sentiment by analyzing factors such as volatility, momentum, and demand. A high reading indicates excessive greed, which may lead to a market correction. A low reading signals fear, which might present buying opportunities. Understanding market sentiment helps investors make more balanced decisions. Stock market indicators are crucial for evaluating investments, spotting trends, and managing risk. By incorporating these indicators into your analysis and strategy, you can make more informed decisions and increase your chances of success in the stock market. Whether you are a trader or a long-term investor, mastering these tools will help you navigate market fluctuations and seize profitable opportunities.